Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, May 29th, 2024, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we are going to take a look at what more crypto ETFs have hit the market, and we're going to touch briefly on OKTA earnings that I recently played. They actually went and reported after the bell today, so we won't really know how I do until after this recording, so we won't have the outcome, but we'll take a look at how it's looking so far. Before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there. You can say hello to myself, Viper, some of the other Blockhead traders. Tips and tricks are always abound in the chat room. Also, you can find a link to thetagang.com/Sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Lastly, this is available in an audio-only format wherever you get your podcasts. Search for us there and subscribe. If you can't find us there, let us know and we will get it there. Well, Viper, let's hop to this week's content. In this week's episode, we're going to touch a little bit on some crypto ETFs, but before we did, I know you were absent from the show last week due to scheduling difficulties that I had. However, I did do an earnings recording on NVDA because, it's kind of the tail end of earnings season and there's just a couple of stocks out there that are still reporting where volatility is really high. That one printed quite well for me. It just had this signature volatility contraction. And so last week I did a little bit of searching for earnings trades to play this week. And I did get an OKTA trade off yesterday. They reported after the bell today. I did blast that out in my thetagang.com feed. So if you caught that, you might have had a chance to take a look at it. But I wanted to give a little bit of a recap of it here on the show because this is just another real textbook volatility contraction play. And I kind of said off recording before the show that this really had an NVIDIA print looking to it. And that NVIDIA print that I'm talking about, what I want to do is I'm going to jump over to the chart here. And what I'm talking about is this is a year chart of OKTA, and these little kind of numbers up here on the top, these are different earnings announcements. And what I want to draw your attention to is the red and green chart down here. And you'll notice that every time you see one of these numbers up here on the top, you see this kind of cliff, this cliff. And this is what I call the earnings cliff or the volatility cliff. And this is what I'm referring to when I say the NVIDIA print. So this particular thing, you can see that just before earnings all the time, the volatility kind of is pumped up and then it just drops like a rock after every single earnings. I mean, some of these earnings really take off and go wild. But some of them don't do that so much and there's not much movement, but you still get this big volatility cliff. If I just pull up a contrast one, I was looking for earnings trades coming up, and Dell is one that came up. So this is a Dell chart. And what I want to call out here on the Dell chart is, again, we got these numbers up here, but look, you don't really have as defined and prominent of a cliff. Yeah, there's a little bit of a drop off, but nowhere near the magnitude of that OKTA. And that's really that volatility cliff that I'm referring to. And that's what I'm trying to trade on the earnings is so not just screening for the cliff. I'm actually screening for volatility to be in an overextended part. But then when I go to check the chart, I'm kind of trying to validate a second factor there to say, hey, it's elevated volatility. That's cool, which means the premiums are above where they normally are. And if it is overextended, heading in, does it normally have a big contraction? And that's where I'm looking for this, volatility cliff that you can see here on this OKTA chart. So in OKTA case, this met my criteria and I said, great, it's time to go look for some strikes. And I did my typical, let's start at a 16 delta strike 16 delta on the put side, 16 delta on the call side, and see where that ended up. On the put side, it was really nice. It put me right at an 85 strike. I like that a lot. I really like the divisible by 5 numbers because those are going to be present in both the weekly and monthly expiration. Whereas sometimes stocks, when you go into the dollar strikes, they only appear on weeklies. They don't appear on monthlies. Even though I'm playing the earnings that were to expire, the options expire this Friday, if I was to roll, I like to be already on those $5 strikes because those will be available in the monthly to roll to. So if we take a look at the Flappy Bird chart, so they did report earnings after the bell today, and as typical Flappy Bird fashion, I've got my red boxes above and below. Now, because this is an earnings trade and this whole thing's going to take like a day, these candles are 30-minute candles, so it's kind of like uber zoomed in. But I wanted to kind of call out where these delta strikes put me. So 85 on the put side was this box on the bottom. Now on the call side, the 16 delta call was like 112, 113. And I didn't really want to not be a $5 strike. So I actually pushed further out than a 16 delta. Didn't quite collect as much premium on that top side. I went to the 115 strike. So you can see that up here. They reported and they thrashed pretty low down here. It touched on almost 86. But they settled out here at about 99. This stock was trading about 97 when I opened it up. And so, I mean, this is as close to hey diddle diddle right down the middle you can get. Yes, there's going to be some pre-market trading tomorrow, but very likely this is going to be a wait 30 minutes after the opening bell to have some of the volatility flush out and then close this thing out because I am anticipating an extreme volatility cliff. Like everything else, and it is amazing the amount of premium that comes off of these things from that volatility contraction. I kind of called that out on last week's episode with NVDA, where it pushed up almost to my call strike, yet I was still able to close out for like 80%, 85% profit on that. Like I said, this is not going to close out yet. I'm going to close it out tomorrow morning. But if we want to take a look at the numbers on how they're shaping up of where I entered, let's go over here to the normal statistics sheet that I kind of throw up. And we opened this up at about 16 delta, 85 on the put side, 115 on the call side. I was able to sell each of those contracts for $2.26 a piece. I went ahead and took 3 of those contracts. That was about my position sizing tolerance for this trade. So I collected $678. This tied up about 3.5K of buying power. So if we do a little bit of math there on my return on capital of this trade, if I was to receive all 100% of the premium, which I won't, but I will come pretty close because of the volatility contraction, how we're stuck in the middle. That would be approximately a 20% return on capital for basically a 2-day trade. And so not too shabby. I'm excited tomorrow to have it open up and close out to ring the register on this one. So Viper, I know earnings trades are not as exciting for you. It's not something that you trade, but I don't know if you have any take on that. This is, man, I really, really am happy that I'm getting more back into really refining that volatility contraction play. But I think you've had your ear to the crypto ground because you were mentioning to me something about this thing called Ethereum, which I guess is like Bitcoin, but what's up with Ethereum?
Yeah, and real quick on the earnings trades and whatnot. I mean, it definitely. I like the plays, and they're attractive. And what I want to call out is something that I've mentioned many times when we talk about your style versus my style and all that sort of thing, because I think it's important for people to continue to remember. I'd like to get back into doing more of those and whatnot because it is a fun, like 1 or 2 day thing, yada, yada. But it takes a very different, I don't know, I guess tolerance might be the word, or just you have to really understand. I mean, as you always lay out with the volatility and everything like that, it takes a very specific understanding of what's happening under the hood. So I tend to go into an earnings play or something like that, and I mean that chart was obviously perfect, exactly what you want to see. But when it starts going against you, and even if it goes all the way against you, and you have to maybe start looking at rolling strategies, or you have to think on your feet of how to maneuver a particular position, that's where the mentality of open a trade, close a trade, versus options trade, where there's unintended options available to you. To can't really look at your red or green number, and you have to look at those other numbers, the Greeks and volatility and all those. And I always have a hard time getting those into one particular dashboard or area and all that sort of stuff. So someday, maybe I'll do it again. I mean, and like I said, they are fun. But it's just it's the mindset thing, and so it's just hasn't been where my mindset is. They are
Well, this
they are
would be a
good plays.
really boring show if we both did the exact same plays. You wouldn't be able to teach me about this other crypto land stuff, which I dabble in every once in a while, but to be honest, sometimes bores me. I don't know. Maybe we got some excitement here with Ethereum.
Yeah, we we get bored in equal direction or opposite directions. So Ethereum, which I think is at least enough of a name that whether you're into the space, whether you hate the space, you've heard it, because I'm pretty sure I've seen it talked about plenty of times on any of the mainstream shows. In the history of crypto, obviously we've had Bitcoin. That's been around 2010-ish, somewhere around there. And the purpose of Bitcoin was literally that public ledger that we always talk about, where it was Peter paid Paul, and Paul paid Susie, and this public ledger of transactions of a token, and that was essentially it. And so that translates into a store of value, if you will, because as people buy it, obviously the price of it goes up because it has a fixed cap and all that sort of economics things. So that's why people refer to it as a store of value token, because it really doesn't do anything other than have this quote unquote value of what people have bought into it with. And we'll skip any of the recent complexities where people have latched on, the Bitcoin community has started to latch on functionality to the Bitcoin blockchain. I barely even understand that. So we'll just stick to it as this store of value, digital gold, as they say, because that's pretty easy to understand. Even if the idea of where the value lies isn't as straightforward. That's the concept of Bitcoin. So along comes Ethereum in, I believe, 2015-ish, somewhere around there. And Ethereum says, hey, this idea of the blockchain, perfect public ledger, consensus protocol, decentralization, all that kind of stuff, that's great. But what if we just extend this to a functional level, and we attach these things called smart contracts to the blockchain? So now, instead of purely having a public ledger just full of transactions, what if we can actually put onto the blockchain a chunk of code that can never be changed or touched once it's submitted into the blockchain? Again, skipping over the fact that there are now modern, it's software. So as the software evolves, there are ways to implement contracts that can be redirected, so proxy contracts. But still, the idea was, what if we can take a chunk of code, submit it to the blockchain? It is now publicly viewable. You can audit it yourself and see what it does. And it also won't be changed. It will function exactly as described. So a really simple example would be check date. Is date Viper's birthday? Send Viper 1 ETH token, please. And like just end it there. That is a very simple chunk of code, and it would live on forever on the Ethereum blockchain. And every day, it's running that code, and it's saying check date the birthday. If it is, send this token, send money from this other account or whatever. So that's essentially what it is, and that's really what all blockchains are, aside from Bitcoin, and again with the giant asterisks of recent developments on Bitcoin. But all blockchains are essentially trying to evolve that functionality, and then they, as software goes, things get better and improve on what came before them. So in some ways, ETH was improving on Bitcoin by adding these smart contracts. Other blockchains are developing in ways they believe improves on Ethereum, yada, yada. So that's how you get this whole ecosystem of blockchains. So where that brings us to what was most interesting last week is all of these blockchains, for fundamental purposes of securing the blockchain, the underlying token of the blockchain, so ETH in this case, it has a value to it, and it accrues value just like Bitcoin does, where initially it starts out, there's zero value to it because it's just a token that was made out of thin air. But then somebody comes along, takes a large chunk of that supply and pairs it to real money in US dollars or whatever. Now all of a sudden there is a value attached to the digital token. So now it has a value. And then the reason that's important is because you rely on a network of validators to reach consensus on those transactions on the ledger sheet. And people don't want to do work for free in any world, digital or otherwise. So the value of that token is used and leveraged to reward people who are validating the blockchain and agreeing on what transactions happened and if they were legitimate and legal, all that good stuff. All that stuff we've talked about in previous videos. So the point, though, is they have these tokens that are native to the blockchain that have a value to them. And then this is where you have the Robinhood app, if you have Coinbase app, all of these tokens are tradable on those platforms for a value. The price goes wildly up and down, yada, yada. So where we are today is we had the BTC, the Bitcoin ETF, spot ETF, which we did a whole thing on when that was approved just a few months ago. And then the rumors started swirling of, well, if Bitcoin, then when's the next crypto ETF going to be? And this is really important to the people in Wall Street and various investors because the spot ETF, just like a gold ETF, gold ETFs give you exposure to the price of gold without having to touch gold or manage the gold yourself. So very equivalently, crypto ETF gives you the exposure to the crypto price volatility and potential opportunity without having to mess with touching any of it. And so after the Bitcoin ETF was approved, the speculation turned, and pretty much everybody universally across the board thought that it was going to be very hard to go to an Ethereum spot ETF approval, and Ethereum or beyond. And that was just because of the SEC's and Gary Gensler's position that Bitcoin was a commodity, was not a securities product. And he was of the position that pretty much everything else that's not Bitcoin is a securities product based on the Howey test and all these other arguments that they've made. And therefore, as a securities product, they could not have a spot ETF without proper registration and all this other stuff. And so really it's been this whole thing for a year and a half plus more. And so out of literally nowhere, this, I don't even remember who it is, but there's a popular economists, the hedge fund type group that they were constantly monitoring their professional best guess at the odds of a spot ETF, ETH ETF being approved, and they actually had just recently downgraded their probability to 25%. And one of the guys in the group said that 25% to him was extremely generous. He was placing it around 10 or 15%. Just the climate, everything was not going well for acceptance in the SEC or in the regulatory bodies of Washington for that. So out of nowhere, we get that group, the guys that were making that prediction, they send out a tweet that all of a sudden they were like, we've just raised our estimates to 75% of an approval. And they said that's the maximum they will ever do. They will never go higher than 75%. And it was based on these rumors that were swirling all of a sudden in Washington that the winds were changing all of a sudden. And so lo and behold, that next day or that same day, later in the day, the SEC sends out a letter to all the exchanges and all the issuers that want to issue this ETF. The SEC sent out a letter to them and said, hey, we want you to return these particular forms, which were their application, which they sent in months and months ago and just had crickets as a response to. They said, hey, fix these forms and send them back on an extremely expedited process, please. And so then that started the rumor mills just going nuts of like, what the heck is happening? Why are they moving so fast? And then sure enough, within a couple of days, the SEC came out and said, we're approving all ETH spot ETFs. There's still an S1 approval process, so we don't know exactly when the products will go live trading, but they have all been approved, and so it's a matter of weeks before these products hit market. So it was pretty wild in how rapidly things changed, and there's probably a lot more to discuss to it than we would have time for, but at a high level, tying it to things we've talked about on previous episodes, honestly, probably almost not exactly, but about a year and a half ago, I think it was towards the top of 2023 when we had a big crypto episode and we talked about, because I think it was when the SEC was really going hard after the various exchanges and things like that. And we talked about our own personal expectations of what needs to happen to make the space, clean up the space, so to speak. And we talked right here on the show about how regulators in Washington and Congress have to step in and start to define clearer rules for the bodies that answered to Congress, like the SEC. And so basically that's exactly what happened last week. For the past year, there was a bill called FIT 21, which stood for financial, I'm going to butcher it. Look it up, FIT 21. So for a year, this bipartisan bill has been going through Congress, and its sole purpose is to define very clear, updated guidelines for the various bodies, the CFTC and the SEC, and how they should co-regulate the space, who owns what type of regulation, and all this good stuff, which was exactly what we talked about needed to happen. Because everybody was vilifying the SEC, but the SEC was kind of marching forward with, here's my best interpretation of what I've been assigned, and I'm just going to do it. And so that bill passed House last week with surprisingly large bipartisan support. It's in Congress now, again, with the expectation that there will be some bipartisan support to it. And most notably, last week, President Biden indicated that should that bill get to his desk, he will not veto it. And so then that kind of signaled to, now we're kind of getting off into just speculation and political banter, but that kind of signals to the Democrats of, he's not going to come out, be gung-ho about all for crypto, but it was clearly becoming a pretty divided topic where Democrats were against it, so to speak. Republicans were starting to latch onto it. And there was just really, there was no value for the anti-crypto attachment from Democrats. It didn't have weight. If you haven't heard, we're in a campaign presidential election cycle. And if anything in a presidential cycle is not gaining voters or is uninteresting to voters, then it is friction. It will be axed off the block. And so to me, I think that's a lot of what happened. Democrats had this stance of being tough on crypto, and it just isn't landing. Meanwhile, Republicans are finding that it's not significant traction, but they're finding traction with pro-crypto messaging. And so they just, I think that signal from the White House kind of signaled like, all right, this isn't worth being a split topic. Let's just all move forward with it, which I think is the best possible outcome for the space, just because it finally helps us move forward to all of the things this could be that's far beyond the casinos that it is now. And that's ultimately where I want to get going, is to that reality. So that's about what happened. And honestly, it'll be interesting how the ETH ETFs perform compared to Bitcoin, because it's just, it's a lot more, to me, it's a lot more like a tech stock than a gold ETF like Bitcoin, because there's just more fundamentals to it. Like, does the blockchain, does it perform well? Is it upgrading well? Is it being taken care of well? And all that sort of stuff. So, but ultimately, I think it was a very good thing, just to get us out of the rut that we were in, and kind of moving forward. But in a very long roundabout way, that's Ethereum and the situation.
When Bitcoin had its first ETFs that got out there on the market, there was one in particular, I think it was Grayscale, that had been trading historically under accredited investors only. Does any such similar product exist out there for Ethereum that you're aware of?
Well, there absolutely is. And it's funny you mentioned that, because this is one of those weird things that, I mean, there's so much about the markets that, as much as we learn and talk about on the show, there's still so much that at least I certainly don't know or fully understand. But what I think is interesting is, just like you mentioned, Grayscale is just one. There's like Valkyrie is another one. They have these products that they start out as trusts. And so it's opened up as a trust, where Grayscale offers this product purely and exclusively for accredited investors, and all of, like, not the NYSE. So it's not a listed product on the stock market, but it's available to certain hedge funds or large groups of people. So they have these products, and they had one for Bitcoin called GBTC. And that got converted into their ETF product that got listed on the NYSE. But it was, I mean, I think it opened up in 2014, the Bitcoin version. And so it was managed just like an ETF. So the whole time it was trading pegged to the price of Bitcoin, and giving institutional investors access to the price volatility. So if we go to Grayscale here, they have a list of their crypto products, and we can see that they are all loaded up here. You have GBAT and GCHG and GLink and Mana, and then right here we have Grayscale Ethereum Trust, ETH E. So I kind of take some of these to be indicative of where Grayscale believes ETFs will eventually hit. I mean, these have been around for a while, but I think they started them with the obvious intent to push be able to offer them as ETF products. And so we'll eventually get to a point where I think pretty much all of these are going to be converted to ETFs and listed in the NYSE. And things get interesting, like with this Grayscale Decentralized Finance Fund, because if you go in there, one is actually a bucket of assets. So this is a list of the tokens that are made up in this. So Uniswap, MakerDAO, Lido, Aave, Synthetics. So it's a bucket, just like you would expect any mutual fund or ETF to be. So they have these ready to go, and and they're constantly applying to get them listed. And then when they're approved, then they go live and everybody starts trading them. So this is also really important to know, though, that this is happening because we saw it happen with Bitcoin, where the listings go live on the products, on the ETFs, and all of a sudden we're not going to the moon. First of all, news is noise. Everything's always priced in the market. That's the job of the market, is to be ahead of where sentiment is going and whatnot. But I believe, at least without being officially studied in this area or whatnot, that part of the reason that's happening is because everybody thinks ETFs are live and it's just going to open the floodgates of all these trillions of dollars, which is not technically wrong. But the missing piece continues to be that there's billions of dollars tied up in these trusts already. And so when those floodgates open, and it's not really a flood, it's just institutional investors going, all right, now it's time for me to sell, and getting their exit ramp, which is fine. But important to know, I think. So yeah, there's quite a few products out there, including an Ethereum one. Several other companies have an Ethereum one. So the interest is definitely there. And the other thing that I think contributed to the rapid turnaround is we had Bitcoin ETF go live. For the longest time, Wall Street was very anti-crypto. But then, as they say, they got a taste of the honey, I guess. They got their Bitcoin ETF, and they figured out how they could make money on it. They saw what the fees were earning. They saw whatever, all the little bits and pieces about how they make money on an ETF. And they were like, holy smokes, this thing is making us some good money. So we want more of that. And so what Wall Street wants, Wall Street gets, is, I think, a pretty good rule to interpret the market.
So what does this mean for you? Is this a product that you're going to look to purchase in some of this ETF, and big chunks, little chunks, no chunks?
That's a good question. I've taken the approach of getting exposure in a couple of different ways. So one, Bitcoin, that one I took some exposure in one of my retirement accounts, which is, to me, as we talked about on the show, pretty much the only way I want exposure to any of these, because you have these crazy high fees, custodian fees, management fees. And I'm perfectly comfortable holding these tokens myself under my own self-custody. So unless it's an account that I can't access those funds, like a retirement account, I definitely want some exposure in those accounts. So I did that with Bitcoin. I haven't decided on ETH yet if I want that, because I'm starting to play through. Like I said, it's a software. It's kind of, we get into the smart contract realm, and it's much more of a rapid development, dog eat dog software development world of ETH could be run by, it could be outpaced by another blockchain, and then all of a sudden not be worth anything. I mean, that's true for Bitcoin too. So there's some of that element going in, where for something like a retirement account where I would only be using these products, they kind of all fall in the same bucket of risk. And so if I'm exposed to one, Bitcoin, then that's probably good enough for that account. But this was still really good because for me and another strategy that I have for exposure to this, which we talked about on a very rare Blockhead Investors episode and not Blockhead Traders, where we talked about how investing is a good way to is a perfectly viable way to get into a market, is having something you're passionate about or that you're convicted on, and finding companies that are doing that thing and investing in them for the longer time horizon. And in that episode, I talked about Coinbase and Robinhood as two equities stocks that I was highly, highly interested in being exposed to as a spillover effect of exactly this kind of moment. I started that process last year, so well before the Bitcoin ETF, but in speculative anticipation of ETFs getting approved, and especially in reading those prospectuses of those ETFs and seeing Coinbase in particular being called out time and time and time again as the custodian for the funds of the ETFs. And there's just tons of fees and revenue opportunity in that. So I, proof of the pudding, I guess, is I took that this in Coinbase was trading around $85, $90. And last I checked, it's pushing up on $280, $300 per share. And more ETF products are coming in where, again, Coinbase is listed as the custodian of assets. So that's another way that I am doing most of my exposure, because everything else I'm pretty locked up. So my maximum risk exposure tolerance, the retirement account, is tapped. My free capital flowing around in the world of crypto is pretty much tapped. And so carving out a little bit for these company stocks, and I feel pretty good with that strategy. And it's that investment thesis. It's the long time horizon. So it's not something that I need to watch or keep an eye on, as long as I know what's happening in the world of crypto. And it's playing out pretty nicely. So
Yeah, makes sense to me.
So with all of that in mind, how do these products, whether it's the ETF, or your retirement account exposure, or just hodling more yourself in self-custody, does any of this change any of your strategy, or how do you view Bitcoin versus, let's just say, everything else?
That's a good question. I guess I've never really thought deeply about some of those aspects. In general, the crypto tokens don't really quite, I don't know, I haven't quite convinced myself to put stuff in these ETFs from a retirement account perspective. It's not that I don't believe in the technology to someday kind of replace it. I don't really know when I'll feel comfortable saying, yes, now's the time to start, trickling in dollars into this type of asset. It probably should be around now, very slowly kind of trickling them in for a longer term investment. I just know that a lot of these types of crypto coins, ETFs, I don't know how much it lumps the ETFs in with it, but just generally the crypto coin prices, which the ETFs do largely track, they seem very volatile still. And I don't know that volatility is really something I'm super comfortable with putting in my longer term thesis at this point. The reason I bring that up is, right, a lot of my retirement is really focused around SPY, or the Vanguard total stock market, where it's a broad based bucket of things that in aggregate generally goes from lower left to upper right. And yes, you get periods of volatility and things like that, but I'm not really convinced quite yet that we are in a consistent, steady lower left to upper right for a lot of the crypto stuff. Could we be there? Sure. Could a lot of things completely derail it? yes, and I still feel like the crypto stuff is a pretty niche area for the longer term thesis. I guess I don't have that well established. Now, shorter term, trading this type of volatility in the underlyings that you called out, coin or those type of things, or maybe even the coin itself, although I don't ever really trade much directive products. I think if they came out with derivatives that were more easily accessible and more comfortable to trade, I'd be all over that. I really, really like derivative products, options on equities, options on futures themselves. But yeah, for me, I guess, to be honest, my retirement portfolio has no crypto in it right now, none. I do have about 10 to 15% of my everyday brokerage in crypto, and it's largely tied up in the AVAX coin because I really feel like there's a lot more utility there. I don't see a lot of utility, and so things like gold, silver, I guess you could say there's utility in there because it's used in manufacturing, but fundamentally those things are kind of boring to me. So yeah, I guess that's where I kind of stand on that take.
Yeah, and that makes sense. And I do want to certainly emphasize and make it louder the hesitations that were kind of underscored in there, because another thing I've been thinking about a lot lately is Bitcoin. Really, because of the ETFs and all this, with this moment that we're in, has this perspective or this narrative around it of like this too big to fail type of thing of like it's only up from here and da 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 da. But at the end of the day, I mean, it has attracted a whole bunch of money into it. But at the end of the day, there's nothing that distinguishes it from another token coming out and all of a sudden capturing the attention of everybody, and then they sell their Bitcoin and go to that. Like there's no, I mean, kind of like you were saying with gold and silver, like, I mean, there's at least a scarcity and yet still valid usage and all this kind of thing for it. So that's something that's been on my mind, especially from the tech perspective of, again, going back to how I said multiple times of like, this is the software world that just has value we've never seen before attached to it. And therefore there's nothing that says Bitcoin couldn't be like the next Microsoft in maybe not a good way, where it was, first mover advantage, but then got stagnant and old and slow, then started falling off the map. And so if it does that, like, I mean, this is different than a tech company. And so does that, so those are the things that are going
like
through my
Intel
mind as well, that people should consider for that volatility, that there are no guarantees at all with this.
Yeah, I think analogy there you could make could be an Intel. Intel seems to have, they were the hot rave a while ago, and now we got chip stocks going to the moon and AI this and AI that, and NVDA freaking going up, 6,000% or whatever. And here's Intel just kind of going sideways and down.
Yep. And that's tech. That's the tech market. And I do think a lot of this blockchain stuff is right there in the tech market because it is tech at the end of the day.
Yep. So, use your own risk tolerance, use your own guidance there. So that brings us to the end of this week's episode. Just a brief touch there on OKTA earnings and that volatility contraction play that I just absolutely love. I'm going to keep my eyes out for a few more of those things, see if I can find another one there. I like to kind of look at those week leading up, plot out where I'm going to play them, and it's just a lot of fun. And, if you do them and you play the right delta strikes, the probability is in your favor. So also nice to have Viper back to give us a little bit of a glimpse there into the new Ethereum ETF space, which is rapidly turned around and on the brink of listing and trading to all the retail traders out there, which will be probably a very welcome thing for at least the foreseeable future, and options to basically allow retail investors and other non-accredited investors and hedge funds and stuff like that to be able to put money into something that just makes the product a little bit easier to enter, where you just go into your brokerage and just like you would buy a share of Facebook or Google or Amazon, pick up some shares of this ETF and basically track the spot price of that underlying crypto token. So it's also good to kind of get a perspective of where, Viper and I kind of feel we have in the crypto space. Maybe some of that stuff resonates with you and opinions that you might have, where, it's okay to have different comfort levels with this stuff. It's okay to be bored with it. It's okay to be super excited about it. And so I really kind of think it's a nice fact that we can kind of share those different perspectives out there for the viewers and see if any of that resonates to you guys. Probably all 6 of you viewers that may have made it to this point in the video. But that is what we've got for you this week. There is more exciting stuff. The Fed's primary measurement of inflation data comes out this Friday, as well as some of the monthly job reports. And that's really going to be a big focus, I think, the closer and closer that we get to November. I think the talk around being an election year, the talk around all of the interest rates the economy and all of that stuff is just going to get louder and louder. So, that should open up, I'm hoping, some good volatility for the premium selling that I do. And maybe it will open up the more opportunity for whatever style of trading you like to engage in. So whatever it is, have fun out there. Good luck. And remember, think outside the block.